Is Mastercard stock a buy at current valuations? I'm going to answer that question in this video looking at the company's revenue, cash flow, profits, and valuation. So let's jump right into it, starting with revenue. Over the last decade, you can see Mastercard's revenue has grown nicely from around 8 billion all the way up to 23.59 billion. Now, Mastercard generates revenue by taking a percentage of the total value of all transactions conducted using a Mastercard. And so the more people use the Mastercard, the more money it makes, and the more people spend when they use the Mastercard, the more money it makes. And so Mastercard indirectly benefits from rising inflation because the things that people are used to buying normally on a monthly basis, people are spending more on those things that they're buying. And so that's creating an increase in total transaction value. And since MasterCard takes a percentage of that transaction value, it's resulting in greater revenue for MasterCard. So it's got that tailwind working in its favor as inflation remains elevated over the last couple of years, and it looks like it's going to stay elevated according to central bank forecasts for another year or two. The next thing I wanted to look at is MasterCard's operating income. The company generates strong profitability, 13.61 billion. That's up from around 4 billion in 2014. And if you compare its operating income of 13.61 billion with its revenue of 23.6 billion, you'll notice that the company is converting a great deal of its revenue into profitability. It's got a very lucrative business model that generates strong profitability. The next thing I wanted to look at is cash flow from operations. And what this shows us is how much of the company's sales turn into cash flow from operations, because companies can play tricks where they can generate sales, but those sales don't turn into cash flow. But you're asking, what will it turn into? Well, sometimes companies can generate sales that just turn into accounts receivable, an IOU. They make a sale to a company or to individuals that results in debt or accounts receivable, which may or may not result in cash 100% of the time, right? If you have accounts receivable, some of those accounts receivable are going to go unpaid. And so that's not as lucrative as generating sales that go into cash. So for MasterCard, it's done a good job in this metric as well, increasing its cash flow from operations from around 3.5 billion in 2014 all the way up to 11.57 billion in the most recent trailing 12 months. So looking at its financial metrics, the company looks in strong shape. And to add to the strength in the business, its main rival, Visa and Mastercard, they're not really competing against each other, lowering prices. They're competing, yes, in trying to get more merchants to accept their cards, trying to establish more exclusive relationships, but they're not doing that by lowering prices. They're not doing that by offering more and more incentives. They're competing, just trying to offer their services and boast about the quality of their services, boast about the billions of people that use a MasterCard or a Visa. And so thereby that limited competition, the limited in scope competition, is allowing industry profit margins to be elevated. Not only is MasterCard generating excellent profitability, but so is Visa. So within the two main rivals, competition is easy. I don't want to say easy, maybe not as fierce. And then, so that leaves a new entrant, so disruptors. And so that's where I think the main risk for MasterCard is some disruption coming from a new financial innovation company, a new financial technology company perhaps coming in and taking market share away from the big guys. But as far as MasterCard and Visa, I think they're going to be, pretty even in terms of market share. One is not going to encroach on the other's space very aggressively, which is a good thing for investors. And so finally, I wanted to look at valuation. Mastercard is trading at a forward price to earnings of 27.92. Near the lower end, it has traded for, according to this metric, going all the way back to 2020. It was trading at one point at a forward price to earnings over 40, and at the low point, it was around 24. So at 28, it's about on the bottom end of that range. So I would say if you're thinking about Mastercard stock and you're trying to see is Mastercard stock a buy at current valuations, I would say yes, it certainly is. The company's got excellent prospects, excellent profitability, excellent cash flow from operations, and a fair valuation. So all things considered, I would say yes, Mastercard stock is a buy at current valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.